Money. Money.
Alrighty, regular listeners, you know that my regular profession is a mortgage professional, and occasionally during occasionally during Money Chat, I talk my arena, which is mortgage. So today I thought I'd talk that we've had realtors in the show on a regular basis, obviously, for the 6 years running of the show. But recently, a hot topic has been the multiple offers that are happening, lack of inventory. But I want to start out by saying, in any real estate market, there is a lack of something. Lack of sellers, lack of buyers, or lack of money. Not everything. Usually just one of them's happening. Right now, we've got a lack of sellers. We got tons of buyers, and we have tons of money at low cost. But look at the positive side. Glass half full, half empty? I don't know. I choose to look at it half full. And the positive side is the fact we've got a lot of buyers and we have really inexpensive money. But let's talk and figure out how to deal with the shortage that we have right now, which is the sellers or lack of inventory. And you have to be competitive in the market because there are so many buyers. And why? Because money is so cheap. So on my arena, when it comes to financing, I just want to give you a few things to think about in being competitive in this very competitive market. And as I said before, when I've talked about this market, what I always tell my buyers is just don't give up. If you want a home, you're going to get a home. As long as you don't give up. If you give up, you're not going to get a house. So just go and fight the fight. Keep making the offers. Try not to get emotionally connected to the house until you get through the process and get your offer accepted. And know that when your home, the right home comes up for you, the offer is going to come together. But the worst mistake that you can do is give up. And learn from the mistakes that you made in the first offer. Also, make sure that you take advice from your realtor. And if you don't have confidence in your representation that you're doing exactly what they're telling you to do, you need to pick up the phone and get another representation. And you know, I've had plenty of them in studio here. I only bring in the best of the best. So here's what I want to tell you in my arena, because that's the area that I'm an expert and can help on. Important in any area, and this is the whole purpose behind this show, and why it's called the Money Hour, is bringing in the best of the best in every arena regarding your money, and industry leaders at what they do. So you need to have great representation in every area that you have representing your financing, and there's no difference when we're talking about your mortgage professional. Their reputation in the local market is going to possibly break or make you getting your offer accepted. Now, I have nothing bad to say about credit unions. BECU, they've got some great products, some great pricing. The reality of it is you don't have a local representation in the market. So having BECU on your letter, I'm just using that as an example. Again, I don't want to, say anything negative because it's a great thing, but having a local lender's name on that pre-approval letter can make or break based on their local experience in the market. So that's going to be huge for you. You must be pre-approved. Now, any realtor out there that has any experience is not going to even show you a property without being pre-approved. Why? It's not to be rude to you as a buyer, but it's actually to respect your time as a buyer. It makes no sense for you to go out and look at properties until you've been pre-approved. Why would you want to do that anyways? You don't know what your payment objective is going to purchase you out in the market. Maybe not as much as what you can approve for. You may approve for more, but your own personal objective and what that's going to accomplish you. Now, be ready to remove your financing. Now, you have to make this decision and whether this is right for you or not, and only you can make this decision, but it's something that you might need to do to get a home quicker and not make as many offers and win in the multiple offer scenario. And removing your financing means you're putting yourself at risk if your financial situation changes. So if you lose your job, you're going to lose your earnest money, and that really is what the risk is. When I'm talking about making your offer more competitive, the risk is losing that earnest money, that good faith deposit that you've put towards the seller. So the larger the earnest money is, the more strong your offer is going to be, but the more at risk if you're not really thinking these things out. But in a lot of situations, if you don't remove your finance contingency, the offer is not going to come together. Another house will, but it's just going to take that much longer. Shorten your timelines. This is a big one as well. Now, if you're not going to remove your finance contingency, shorten the timeline. Again, finance contingency means if anything happens with the financing, your earnest money is at risk. So maybe you want to have that in there because you don't know what the property is what the appraisal is going to come back at, but shorten that timeline on the financing. Now, why is this my arena? Because I'm in charge of the financing. So make sure that you've got your financing lined up and taken care of very quickly. We work together as a team between your mortgage professional and and you as a buyer. So they can't do it all on their own. It takes you to be diligent and to provide the information and expedite it to get that finance contingency removed. Closing date, shorting your turn times on a closing date. Now, I would say as a mortgage professional doing this day in and day out, it's kind of challenging on a closing date because you do need a particular period of time to close. But what you're hearing out in the market now that you need 45 days because of all the new regulations with TRID and all that, yes, there's a lot of days that have been added. It's a lot harder than it was before TRID came into play, which I've talked to you about a couple times during Money Chat. Bottom line is it shouldn't take 45 days to close. Anything shorter than 30 days can get tight, but again, it really depends on what you're willing to do. Are you willing to pay for a rush appraisal? A lot of different things that we can talk off online, or you can have a conversation with your mortgage professional. Loan program is a big one. What type of loan program you're utilizing can make or break that offer getting accepted. Your best financing option is conventional financing. Now, not to say the best option for financing based on making your offer competitive is conventional financing. Now, you may be listening as a veteran. Oh my gosh, it's the best loan program out there if you're a veteran. If you fought for our country, that is awesome. The bottom line or the reality is with the seller, it's the worst financing because it's a VA appraiser that's going to come in and they're going to be a lot stricter on the property, which is going to put risk to the seller and that offer not actually closing. If you want to be more competitive, it's your decision. You can go with conventional financing if you can qualify and then turn around and refinance to a VA loan after you've got your home. So there's a little way around that. FHA financing is not going to be as favorable as conventional in the market either. But any of you going FHA financing, it's because you need to go FHA financing. I will tell you as a mortgage professional, if I'm showing you FHA versus conventional, you will choose conventional every time. But if you can't qualify for conventional, FHA is the only way that you can get into a home. That's okay. I work with clients using FHA financing all the time. It's just going to take a few more offers to get their home accepted. So again, just going in with realistic expectations and understanding what you can and you cannot do. Appraisal, again, this is a decision for you. What are you willing to do with the appraisal? If you've got extra cash and you're willing to pay for a higher amount than what the appraisal may come back at, a lot of buyers are doing that to be more competitive in the market. Now, it is crazy out there, but what I will tell you is the market always goes up, down. Market always goes up and down. We will have a crash. The question is, when is that going to happen? Does it really matter if you plan on holding onto your property because property values will always come back up? So look at the history of real estate. It's still the safest investment. We're in a great market here. Don't worry about what the market's going to do, when the market's going to drop, or how much more it's going to appreciate or it's not going to appreciate. If it's the right time for you to get into property and moving up to a new property. So that's my money chat for you today. Coming up next on the Money Hour, Social Security dually update. Andy Landis, nationally known author, speaker, and my go-to everything. Social Security, Medicare, and Medicaid right here at 11:50 a.m. KKNW after the short break.